بسم الله الرحمن الرحيم. My dear students, Assalamu alaikum wa rahmatullahi wa barakatuh. We are still dealing with chapter 3, that is credit facilities in commercial banks. This chapter is composed of 5 sections. We finished the first 3 sections. The first section was regarding how and what is and what are the credit facilities and other topics. Section 2 was relating to how to analyze the statements of the client, I mean the company, asking for a credit facility. Section 3, the last lecture, was dealing with lending in general and kinds of loans and how to record these loans with its interests up till returning back the fund of the loan. And now we are subject to section that is letters of guarantee. A letter of guarantee represents a commitment from the bank at the request of one of its customers, of its clients, to pay the value guaranteed by this letter to the beneficiary as provided for in the letter and within the covered period. So, the bank is guaranteeing a certain person, a certain customer, a certain client. He may be a normal person or a legal person, I mean a company. And in general, it will be a company. Why the company asked for a guarantee? Because it may be dealing with any party and there is a guarantee required. So the bank is the entity that may guarantee the client as the client has a current account or a client at this bank. The letter of guarantee cannot be endorsed, transferred or confiscated. The letter of guarantee cannot be endorsed, غير قابل للتظهير, cannot be transferred, غير قابل للتحويل, cannot be confiscated, يعني لا يمكن إن هو يتصادر. The letter of guarantee has 3 parts. What are the main parts of the letter of guarantee? The letter of guarantee, there is the client of the bank, there is the bank itself, there is the beneficiary. So the bank, we call it guarantor as the issuance of the letter of guarantee. Then the client, that is the guaranteed, this is the one asking the bank for the guarantee, and the one who will be benefited by this guarantee we call the beneficiary, who has the right to claim the bank by the value of the letter as provided for in the covered period according to the conditions written in this letter of guarantee. Types of letter of guarantee. Letters of guarantee are divided into primary, elementary, and the final guarantee letter. And the former, that is the primary, is to be used if the client wants to submit a tender or a bidding. You know, المناقصات والمزايدات, and represents a minimum percentage as an insurance to ensure the serious wishing to progress in the bidding or in the tender. Usually the ratio range between 1% and 2%. So at first the ratio is 1% or 2% from the value of the letter. This is a primary or elementary letter of guarantee. We have to consider that the value of the primary insurance should be repaid in the absence of awarding يعني لو ان العمليه ما رسيتش عليك وانت عامل ليتر اوف جارانتي 1% او 2%، يبقى لازم تسترد فلوسك. But in case of awarding رسيت عليا، the letter of guarantee is to be transformed from primary to a final letter, and its value should be raised, should be increased. It was 1 or 2%. No, it will be raised for a higher ratio, usually between 5 and 10%, and its period may be less or more than one renewable year. So the letter of guarantee may be for 1 year or less. In general, it is less than 1 year, but its upper limit is 1 year. It may be primary, and it will be about 1% to 2% of the value of the letter. But if it is awarded, now it will be final letter, and the 1 or 2% will be raised to 5 to 10%. The letter of guarantee is to be issued as an original and a copy. So أنا عندي أصل وصورة. The original will be sent to the beneficiary, or we may give it to the client to send it by himself to the beneficiary, and the copy will be kept in the bank for recording the transaction. Again, the letter of guarantee is to be issued as an origin and a copy, where the origin is to be given to the client to send to or send directly to the beneficiary, while the copy is to be kept for the purpose of recording in the bank's accounting and statistical records, and the bank has to keep a card for each client. Say, for each letter of guarantee. Why? For whom the letter is issued. For each client for whom the letter is issued. So it is for the letter itself regarding this client, in which, in this card, what can we record? It records the value of the letters and the different dealings regarding it, as renewing, cancelling, and its balance whenever a deal happened regarding the card all over the period of this letter of accounting recording for the letters of guarantees transactions. There are transactions begins by asking the bank through the client to open the letter of guarantee until finishing the purpose of this letter. I'm telling you, please look page 200, 208 with example 1, 2, and 3. 4. The journal entries for recording the cover, bank's commission and fees, the issuance itself for the letter as a regulatory entry, and its cancelling, as well as cancelling means closing the regulatory entry, as well as the refunding of the cover's value or using it for settling the letter of guarantee. As I'm underlying the following paragraph, so it is important. It is to be noted that in case of partial cover, so the letter may be covering the whole value or a part of the value, and he is giving me a notice that in case of partial cover, the difference should be covered through the customer. The difference will be covered through the customer. So suppose that the letter is for 10 million and the cover will be for 8 million only, not the 10 million. So the client himself should cover, should pay, should give the bank the 2 million, and the cover will be partial for 8 million only, either in cash or through the current account. So the 2 million, the client or the customer may give it to the bank in cash shape or to be deducted from his current account with the bank. And in all cases, the bank should reverse the entry of issuing letters of guarantee, the regulatory entry, and to calculate any additional fees or commissions regarding this letter. Now, please open your book in page 204 to begin solving example 1, then example 2, then example 3, then the section will be over, or the game will be over. Example 1. In page 204, he told me that one of the banks issued 3 letters of guarantee in 8 November 2018 at the request of a client. So I will not issue a letter unless there is a client who request and fulfill or write a request to open this letter in favor of a governmental unit following the Ministry of Education. This is the beneficiary. And the following data are available for the mentioned 3 letters. I will give you all what relates to the 3 letters. Then I will require or give you instructions to begin fulfilling these journal entries. The first letter was in the 7th of December 2018, worth £100,000, fully covered, so not partially, fully covered by the current account of the client, and the commission and bank fees for the issuance amounted £814. A notification arrived to the bank at 11 December 2018 that payment was carried out by the client because it is wholly covered. The second letter deserves at 29 November 2018, worth 150,000 Egyptian pounds, which is covered by 40%, so partially covered. 40% of 150 means 60,000 pounds, and the remaining amount 90,000 pounds, that is 60%. Okay, so covered by 40% in cash. It is in cash, not through current account. So the client paid to the bank 60,000 pounds, and the bank will cover the 90,000, plus issuing commission for the letter of guarantee by 0.5%. 0.5% out of the 150,000. This means, I think, 750. We will calculate it. 750. As well as other banking fees amounted 118. So not 750 only, but 118 other banking fees. At maturity, on notification of repayment is arrived to the bank at December 1st, 2018, and the repayment was fulfilled through the conversion to the beneficiary's current account. So the beneficiary has an account in the bank, at the same bank, out of the bank's client credit current account. So current account in the debit to decrease the client current account in the credit to increase the beneficiary current account. I will explain it again. But now the third letter deserves in 13 December 2018, worth 70,000 pounds, which is not covered. Not covered. So, wholly will be a letter without any covering from the client. Its commission and issuing fees amounted £1,317 to be discounted out of the client current account, and the client paid the value of the letter at maturity. So there is 3 letters. The first is completely covered by the client. The second is partially covered. The third is not covered. The 3 kinds. And you are required to record the previous transactions in the bank records, taking into account the following. The bank's policy confirms that the regulatory entry is to be prepared using the uncovered value of the letter. This means that the policy of another bank or other bank may be asking for a regulatory entry for the whole amount of the letter, even though it is covered partially or wholly. But here I will prepare the regulatory entry with the uncovered value of the letter. Number two, the entry is to be used for recording each of the collection regarding the value of the cover, in addition to the commission and the issuing fees. So one letter to be recorded covering both the entry, the letter itself and the commission. Recording the quality stamp tax can be ignored. I didn't mention the tax here, so even if I will mention it in the example or in the case, but I'm telling you that recording the quality stamp tax can be ignored, so I will not record it. For the solution, I will begin to read again, taking the policy of the bank into account as in the requirement. The first letter was for 100,000, fully covered by the current account of the client, and the commission and bank fees 814. Okay, client current account will be debited because I will take the amount from the client current account. Why 100,000 814? Because the 100,000 is the value of the letter and the 814 is the commission. So the client current account will be decreased, will be in the debit by 100,000 814. In the credit party of the entry, letter of guarantees cover account 100,000 and commission fees 814. He told me that in 11 December 2018, the payment was carried out by the client. So now we have nothing to do with the letter of guarantee. We have to cover it. So letters of guarantee will be in the debit to close it. Then client current account will be 100,000 pound in the credit. Okay? Because the client paid to the beneficiary. So the amount I get aside from the client current account will be back to him again 100,000. But we get aside 100,000 814. Yes, but we refund him by 100,000 because the 814 represents a commission for the bank. With respect to the second letter deserves 29/11/2018 worth 150,000, which is covered by 40% in cash. 40%. So I have to prepare a regulatory entry after covering 40% through 60%, using 60% of the letter, that is 90,000. Anyhow, the commission will be 0.5%, we said 750, plus additional expenses 118, okay? At maturity, we can prepare the two entries now, then at maturity, we will complete. Now, cash account, because the client paid in cash, not from his current account. Cash account 60,868. 60,000 represent the 40% of the letter, the value, the letter's value. 150 times 40%, 60,000. What about the 868? Yes, I have a commission of 750 and I have issuing fees of 118. The total is 868. So cash account debited 60,868. Letters of guarantees cover 60,000, 40% of the total value of 150. Commission 750. Other issuing fees 118. Then the regulatory entry. Why we didn't make a regulatory entry in the first letter? Because the first letter was covered completely by the client. So we have no, we will not consider or record any regulatory entry. But here the client covered 40% only. So the guarantee regarding 90,000, that's 60% of the 150. So customers' commitment for letters of guarantee issued, bank commitment for issued letters of guarantee 90,000. There is a notification now to complete. At maturity, a notification of repayment is arrived to the bank, and the repayment was fulfilled through the conversion of the beneficiary's account, current account at the bank out of the bank's client current account. Now, on arrival of the notification, letters of guarantee cover 60,000. We are closing it. Client current account 90,000 in the debit. Please, the client current account should be on the left right hand to be moved because it is in the debit. It is something wrong from me. And the beneficiary current account 150. So the beneficiary current account is increased by 150 in the credit. The current account of the client is decreased in the debit by 90, and the letters of guarantee was covered 60%. We are closing it now. Then we have to close the regulatory entry, that is 90,000 pound. So bank commitment for issued letters of guarantee. This is the debit party. The credit party customers commitment for letters of guarantee issued 90,000. Now what about the third letter? He told me that the third letter deserves in 1312 worth 70,000 pounds, which is not covered. Not covered, so I have to prepare the regulatory entry by the 70,000 completely. But after getting the commission in 1317. So client current account in the debit and the commission in the credit 1317, 1317. Then this is the regulatory entry using the 70,000 completely because there is nothing covered. So 70,000 customers commitment for letters of guarantee issued, bank commitment for issued letters of guarantee. At maturity, we can read again in the book. At maturity, fees amounted to be discounted out of the client current account, and the client paid the value of the letter at maturity. So he paid the value to the one called the beneficiary. So just we have to close our entry. So bank's commitment for issued letters of guarantee 70,000, customers commitment for letters of guarantee 70,000, and the payment is done through the client himself. Solving example number 2. That's in page 207. 207. You are required to record the accounting journal entries through the following transactions that took place regarding letters of guarantees department of the National Bank during the month of December 2018. The bank issued letters of guarantee at the request of one of its clients after deducting 40% of the value as a cover, so the uncovered is 60. Out of the client's credit current account, so the client did not pay in cash, but we deducted it from his current account in the debit side. At the bank, where the value of what is uncovered is worth 420,000 Egyptian pound. What is the value of the letter itself? He didn't tell me. But he told me that the uncovered is 420. The covering is 40%. So the uncovered is 60%. The 60% equal in value 420. So 420,000 divided 60% gives 700,000. So the letter equal 700,000 pound. 20% 280 covered, and the remaining 60% 420 uncovered. Then, commission and issuing fees for letters of guarantee has been calculated to be 3,518 pounds, as well as a quality stamp tax on letters of guarantee amounted 914. Due to the client's non-fulfillment of his commitments regarding some of the letters, the bank paid the dues in cash, with the first claim of those whose letters have been issued, he means the beneficiary, on their behalf, deducted from the current account of the client, and this claim amounted 370. Pay attention. that there is a cover of 40% of any amount. So the 370, if multiplied by 60%, this is the uncovered. The solution? Okay. First of all, the value of the letters that the bank agreed to issue equal 420 divided 100 minus 40%. 420 divided 60% gives £700,000. Why we fulfill this calculation? Because he told me the uncovered value 60% equal 420. So if 420 equals 60%, so 100% equal 420 divided 60% gives 700. Second, the covered value equal 40%, the covered percentage 40%. So the covered value 700,000 times 40% gives 280. That's why the uncovered is 420, as you see in the second line in this slide. And now we are presenting, or we can present the entries in the bank's journal as follows. Getting value of the cover out of the client current account. Client current account 280,000. Letters of guarantee cover 280,000. Where is the commission and the fees? He didn't tell me that we will fulfill this in one entry as example 1. So now client current account 4432. Why? Because there is commission as revenue for the bank and issuing fees 3518 plus quality stamp tax, that is Ministry of Finance 914. We took this value, we deducted this value, we funded this value, these two values from the client current account. Then preparing the regulatory entry by the 60%. Customers' commitment for letters of guarantee, bank commitments for issued letters of guarantee, 700,000. He didn't tell me that the policy of the bank is to prepare the regulatory entry with the uncovered only. So, as he didn't mention, I have to prepare the regulatory entry using the whole amount, the full letters of guarantee value, 700,000. Then recording the customer's performing of some letters. From where 330? Because the amount is 700,000. And the part that the customer did not cover, as he told me in example 2, look at the book please, before the solution, page 207, before the solution directly, مباشرة. He told that the claim amounted 370. Why the beneficiary claimed the bank by 370? Because he received the remaining. So 700,000 minus 370 means 330. So bank commitment for issued letters, customers commitment for letters of guarantee issued, 330. We close the regulatory entry by the amount settled by the client to the beneficiary. Completely. Now, recording the recovery of the part that the client has performed. 132,000. From where can we get this 132,000? I'll tell you now. The amount the beneficiary asked the bank about is 370,000. As there is a cover of 40%, so 40% of the amount 370 gives 132. Letters of guarantee cover, client current account. Okay. Then, recording the bank settlement of the letter that the client did not pay, the remaining of 370, out of which we will deduct 132. So, letters of guarantee cover 148,000. Then, current account 222,000. Then, cash or beneficiary current account. If we paid to him in cash, so cash account. If we add it to his current account, so current account. But please, the account of client current account itself should be shifted somewhat to the left side because it is in the debit. This is a mistake from me. Then cancelling the last part of the commitment letters we are dealing with. Bank commitment for issued letters of guarantee 370, customers commitment for letters of guarantee 370. The last example is example number 3 that we find in page 209. He told me that suppose in the case of third letter by example 1, the third letter, it was for 700,000, I think. Please go back to example 1. The third letter is 700,000. It is written wrongly 70,000. 700,000. Yes, it was uncovered completely. Okay, what about the example 3? Suppose that in case of the third letter by example 1, that at maturity, the client does not pay the value of the letter, 700,000. It is written in example 170 only. Please correct it. Where its current account balance was credited by 190,000. Please correct it, not 19,000. 190,000 only. And the bank has to pay the value at maturity in cash to the beneficiary, with loading the client by bank fees of 537. So now, client credit current account will be debited by 190, that is settled. Client debit current account will be debited, but it is not a debit current account. It is client debit current account, not credit current account. So if credit current account, he has a credit current account and we are decreasing it. But now he has nothing with us as a current account. His current account is 0. So we lended him money. So this client debit current account 5110537. Why? Because there is 537 bank fees account and cash equal 700,000. So we paid in cash for the beneficiary 700,000 and we calculated fees or interest upon our client 537. That's why the covered part from the client current account, that or the value of the current account, of the credit current account that will be debited to take the money from it, 190, then there is a debit current account of the remaining of 700,000, that is 510 plus 537, that is the bank fees. Then we have to close the regulatory entry by the 700,000 bank commitments for issued letters of guarantee account, customers commitment for letters of guarantee issued